Monday, March 18th, 2024, Monaco 64, home of alternative economics and contrarian views. So it could be a very important week for the Bank of Japan and other central banks as well, like the Fed and the Bank of England. But we will focus on the Bank of Japan and their ridiculous obsession with deflation. And you might think, what are you talking about? Well, I'll show you why it's a ridiculous obsession today. Before I do, I'd just like to let you know that if you're interested in adding on to your gold and silver stacks, Miles Franklin and Gold Investments here in the UK still have some specials on. Miles Franklin still has pre-1965 coinage, US constitutional coinage at only $1.99 over spot. Yes, silver constitutional. They've got pre-1933 $20 gold pieces at only $65 over spot. Over at Gold Investments, they still have their usual specials. They've got 1% discount on Krugerrands. Promo code there is Monaco64 Krug. They've got a 1% discount on 1/10 of an ounce Gold Britannias. Promo code there is Monaco64 10th. For everything else, you still have to use my promo code Monaco64, and it's got to be done separately. So back to the central banks. And it's not just an important week for the Bank of Japan, and they're meeting late today, I think after midnight London time. So tomorrow morning at this time, we will know what they have done. And they've kept rates negative, the policy rate negative for 8 years. And they're so concerned about what they call deflation. And why do I do this? Well, because if you look at Japanese M2, which is the money supply, it's been going up forever, at least since the early 60s, as you can see. It's never really gone down. It stayed a little bit flat back in the early 90s. And but if you look at the chart, you've never seen a dip in it. And if you've been following me for a while, you know that the increase in the supply of money and credit is inflation. And usually it leads to rising prices. Not all prices rise at the same time, of course. And sometimes prices can even drop during an inflation of the money supply. But unfortunately, today's economists, central bankers, they've been brainwashed into thinking that inflation is the CPI, which is the consequence of it, the consumer price index. And yes, Japan has had negative CPI, which is a good thing. It means that the Japanese public, they can buy things cheaper, but the central bankers, they have this deluded or ridiculous obsession with falling prices. And why is that? Well, I think they have this belief that it will lead to people hoarding and not spending, and it will bring the economy down. That's just a Keynesian, an old Keynesian obsession with the animal spirits. And so they need to keep increasing the supply of money and credit. They want to keep prices rising, which doesn't make sense. They want to keep debasing the currency. So I want to show you this again here. This is from the Webster Dictionary from the early 70s. Deflation in the monetary sphere is the reduction in the volume of available money or credit resulting in the decline of the general price level. Inflation, on the other hand, is an abnormal increase in the volume of money and credit, resulting in a substantial and continuing rise in the general price level. So, as I said, and you can see here, Japanese M2 or inflation has been going up for over 60 years, and they're concerned about deflation. Well, that's because everything is perverted. So, and what this has done to Japan is that it's lumbered it with a massive national debt, which is approaching 300% of GDP. And why have they done that? Well, because in the early 90s, after they had their stock market and real estate bubble, the Japanese banks would have collapsed if the Bank of Japan hadn't really gone into this policy of very low rates, of fiscal policy increases, the national debt, and they've kept doing it. They've kept these zombie banks alive, and that's what it's all about, keeping the zombie banks alive and debasing the currency of that the Japanese are forced to earn in, right, when they work, and forced to spend in when they buy their goods and services. And why have they done that? Well, because as a result of the bubble bursting in the early 90s, the Japanese banks had massive amounts of debt, and they have to make sure that that debt inflates away, it loses value. You can't have actually the value of the debt go up, prices go down. It's really bad for the bankers. It's good for the public. But now, they've been in this policy, delusional policy, for over 30 years. And in the last 8 years, as I said, they had negative rates. And it's not even certain whether they'll do that in March. They might do it in April. But I think it's too late, whatever they do. Even if they raise rates, it's going to make things even worse because the debt is so huge. Debt servicing is going to go up. So Japan, well, especially the Bank of Japan, has really set the stage for the destruction of the Japanese yen. And I've spoken about this many times. And this is going to affect the whole of the West, because this loose monetary policy that Japan has been running has been called the Japanese yen carry trade, which has allowed Western investors to borrow very cheaply in yen and buy other assets, and it keeps the everything bubble going. So that's the other problem with this. It's not just a problem for Japan, it's a problem for us in the West. So this week as well, we've got the Fed coming out on Wednesday with its announcement, and all the eyes are going to be on this dot plot, which shows how many rate cuts they expect this year, and all the different governors will put their dots. And the markets expect something like 2 or 3 rate cuts. They expected 6 at the end of last year. So watch out for the dot plots. And at the Bank of England, they're coming out on Thursday. They're supposed to keep rates unchanged at 5.25. And we'll have to wait for what they say really about rates going forward, and how many of the governors voted to keep rates unchanged. Last time around, I think one of them voted to raise rates and one voted to cut rates. So that's going to be what we need to watch. But as Rafi said on Friday, I had him on. Yeah, they're damned if they start raising. Well, they're damned if they cut rates, because people are going to see that they're going to continue inflating, and they could even be damned if they start raising rates if CPI doesn't come down, because all the debt's still there. And the more you service the debt, the more you need to service the debt, the more costs are going to go up. So I think the moral of the story is that in Japan, after more than 30 years of easy money, money printing, it's going to be very difficult to get out of jail, so to speak. There's no such thing as a free lunch. And also in the West, with the Fed, the Bank of England, and the ECB, there's no easy way out. And that's why I keep talking about the fact that it's important, at least for me, to have some gold and silver to protect my savings, because these currencies are, and they're only going one way, towards worthlessness. And the Bank of Japan, as you can see here, is one of the currencies that's been the worst performers versus real money, i.e. gold. I think we're around 320. Yeah, we've been above 320,000 yen for the ounce of gold, and that's only going to get worse. And I was reading earlier today this article here in the FT that came out yesterday. Will the Bank of Japan finally raise interest rates? And they've got this stupid idea that they have to be really careful, because CPI is not really, CPI at 2% is not really entrenched in the economy. They're worried that if they raise rates, that CPI will go down to zero or negative, which is a ridiculous worry. Because what's the problem with people paying less for things? So anyway, that's the Keynesian world that we live in, upside down world, where inflation is good and deflation is bad. So let's quickly look at where the markets are this morning. I'm a little earlier today because you guys in the US are an hour ahead. So I thought we start early. Rudy as well woke up quite early. We've been for a walk already. So where are we? Well, spot gold is down slightly of $5 at 21.50. A low has been 46 and the high 57. Silver has come off a little bit, about 11 cents right now. It's at 25.06. Low's been 24.93. The high's been 25.24. Dow futures is down 11. NASDAQ futures is up 111, over 0.5%. And the S&P is over 0.33% as well. So I'm not sure what's going on there. The currencies are pretty much unchanged, so I won't go through them. What about commodities? Well, crude oil continues to go higher. WTI is up 0.75% at 81.20. Brent crude is up just over 0.5% at 85.42. High-grade copper is down slightly, 0.25% at $4.12. Platinum, let's have a look at where platinum is. Platinum is actually down $15. So platinum and palladium are down quite a bit. 1.6% platinum, and it's down around 922. So that's strange, because all the other commodities are up substantially. We'll look into that later. What about the bond markets? Well, they're quite steady, pretty much unchanged here. The 10-year yield is at 4.30. And with that, I'm going to wish you all a very good day and a good start to the week. Take care. Bye.